Good afternoon. Welcome back to Money Control's live stream. You're watching Closing Bell with me, Lovisha Darad, and joining me, my colleague Yatin Mota. Well, Yati, but once again, weekly expiry has kept the sentiment bogged down. And as we were discussing, the major plus for the markets did come in from the broader indices. Second day of recovery for the mid-cap and small-cap space too. But Sensex 200 points down, Nifty flat in the red, but above that 23,900 mark, just like what we saw yesterday too. Broader indices continue to reflect optimism. Both of the small-cap and mid-cap indices have outperformed. Among sectors, we saw Nifty Auto Index that rebounded today, 1% gains which came in, along with Nifty Energy and metal indices, which extended gains to about the fourth straight day. The pain, however, was seen in the financial stocks. We saw that the Bank Nifty Index was down 0.5%. Heavy losses seen in HDFC Bank, the banking index heavyweight. On the other hand, other sectors like Nifty IT Index continue to remain bogged down, and even Nifty Pharma Index remains under selling pressure. So, Yatin, all in all, a very quiet market once again. FIA participation is on the sell side. Tariff jitters continue to play spoilsport, and cautiousness prevails. How are you seeing it?
So cautiousness is there, but the global markets are not bogged down by the sentiments in general and the news flow which is there in the international market. Indian markets back home, range bound trading session. In fact, for the last 2 or 3 trading sessions, we are looking at the markets which are bouncing back from the 22,800 mark. In fact, today also our low was close to 22,800, from which we bounced nearly 100 points in trade. And that's the reason why, the market breadth has improved. In fact, if you look at the mid-cap index, both of the mid-cap index and the small-cap index moved almost 1.5%. Reason, why the advanced decline ratio was almost, 3:1. So overall, metals, energy, PSU, banking stocks saw overall buying. But as I mentioned earlier, 22,800 is something from which we are consistently bouncing for the last, 5-7 trading sessions.
That's right. Let's take a look at what the top movers on the Nifty 50 were. Shriram Finance, which has extended gains to about 5th day. NTPC, after board paid out additional dividend. So we will be talking about more on the stock too later in the segment. But NTPC giving about 3% gains at this point of time. M&M also rebounding after 7 to 8 day fall. M&M giving about 3% uptick coming in for M&M. Bharat Electronics, Adani Ports also did well. Adani Ports seeing about 2.5% uptick too. On the other hand, if you look at the top losers on the Nifty 50, that includes the likes of two heavyweight stocks which contributed to the Nifty's fall. That was your HDFC Bank and Maruti Suzuki, seeing about 1 to 2% cut. Tech Mahindra, again 1.5% cut coming in for Tech Mahindra. Tata Consumer Products also seeing a bit of cut, and of course HCL Tech. But from the mid-cap and small-cap spaces, what are you gathering, Yatin?
So, if you look at the mid-cap end of the market, Godrej Industries, that stock moved 18% in trade today. Stocks like PPL Pharma, Radico Khaitan also moved 8 to 9%. So, good moves coming in on stock-specific names. JBM Auto, after a 15% move yesterday, saw some profit taking, 6% down for that stock. Ajanta Pharma, Aegis Logistics were the other stocks which saw a correction of 4 to 5%. In terms of top traded counters, BSE Limited saw a good bounce back, 6% up for that stock with a turnover of nearly 3,000 crores today in the cash segment alone. Stocks like UPL, Narayana Hrudayalaya, all of these stocks continue to hit 52-week highs. However, if you look at Kirloskar Engineering, Serra Ceramics, Birla Soft, clearly reeling under pressure and are at a multi-year low. But overall, the sentiment in the mid-caps were quite positive in trade today.
All right, positive coming in. But yes, one stock which was one of the top gainers on the Nifty 50, that was your NTPC, because the stock did surge up to 4%, but it settled with about 3% gains or so. But what cheered the stock was the company's additional dividend payout, which the company said that it has paid already additional about 2,424 crore rupees worth of interim dividend to shareholders. Now this comes in addition to the first interim dividend of 24 crore which it had paid in November last year too. And this also marks the 32nd straight year that NTPC has paid the dividend. Apart from this, Motilal Oswal in a recent report highlighted that NTPC could be a clear beneficiary of India's plans to triple the nuclear energy by 2032. One of the projects which NTPC could benefit is the Mahabansweri Rajasthan Atomic Power Project, and the brokerage estimates that this project could roughly add about 5.8%, nearly 6% to NTPC's regulated equity base. Additionally, NTPC also plans to spend about $62 billion on expansion of the nuclear power over the next 2 decades. Now, this is about 3 times more than the street was expecting to. Yeah, Yatin, the stock has fallen about 30% from highs, and now with the dividend payout and the nuclear energy expansion plans, the bottom could be here.
Clearly, and there was some excitement in the shares after we had the NTPC green IPO success. However, those shares are below IPO price. So there was some profit taking in general for the power sector. However, as you mentioned, the nuclear power plants moving ahead could be a big opportunity for NTPC along with the green projects like the solar and the wind projects via the subsidiary are concerned. So good move on the entire power sector. In fact, since we are talking about the power sector, the other stock from the power sector to focus on would be NHPC. Now, CLSA has a outperformer rating. They have upgraded the stock today. The target price is now nearly 117 rupees per share, which means 25% plus kind of upside from the current market price. Now, CLSA believes that the recent stock correction provides a good opportunity for accumulation on the stock. In fact, NHPC's total power capacity addition, including the Parbati 2 hydropower project, would add nearly 27% to the regulated equity income, moving forward. In the first quarter of FY25, we could see good momentum on that particular project according to the CLSA report. In fact, FY24 to FY28, CLSA believes that the large project would drive the overall earnings, given the fact that most of them would be coming online in this particular period. Primarily, the company is into hydropower projects, but of late they have started doing certain solar power projects also, which could improve the execution of the power capacity addition in the near term. So, NHPC, this stock was one of the top FNO gainers, almost 6-7% intraday high is what we saw in the stock move today after the CLSA upgrade.
That's right, and even they are planning for a listing of new renewable energy arm over the next 2 years. So we will be watching out for the stock too. But coming to the next stock in focus, that is your tobacco stocks that came into limelight today. We saw the likes of ITC, VST Industries, and even Godfrey Phillips decline up to 3% amid news of GST hike. Now, news reports have suggested that the government may be considering a GST hike on cigarettes and other tobacco products after it did not impose a compensatory cess earlier. Now, the idea is to ensure that the tax collections don't drop once the compensation cess is gone. And compensation cess is about to end in March 2026. As of now, cigarettes and other tobacco products face about 28% GST besides cess and of course other levies. And one of the suggestions which was made was to raise the GST up to 40%. So that implies another 12% increase in GST. And on top of that, additional excise duty is also being planned. So that's why the stocks have reacted negatively post such higher tax have been proposed, which could dent its sales and profit too. The tobacco stocks, they were completely in cheer mode after the budget skipped any tax changes. And even Jefferies came out with its note saying that calling ITC is a real winner. But now this news has completely dampened the sentiment on the street. What do you make of it?
Yes, any tax changes probably are sensitive to the entire cigarette pack. In fact, ITC usually during the budget or during the GST Council meeting, the stock turns quite nervous. Obviously, the GST Council meeting would take time, in order to ratify certain GST changes. I'm not sure if it comes in the upcoming meeting, but deliberations could also spook investors. However, today the stock, including the likes of Godfrey Phillips, shares of ITC dipped in trade on the possible government move to increase the GST slab and slap excise duty as well on the entire sector. So we'll watch out for the developments. I think it's too premature to really go on the news reports which have been talking about a very steep hike which is anticipated for the entire tobacco sector.
That's right. But coming to the next stock, which also cracked in today's trade, that was your Bajaj Finance. It cracked up to 1.5%, but it settled with about more than 0.5% declines. This came after UBS shared a cautious note on the counter. It shared a sell call and implied another 18% potential downside with about 6,800 rupees target price. Now, what UBS analysts fear on the counter is that the high credit costs in the personal and SME loans, which make up about 38% of the company's total loan book, will act as a dampener in the upcoming quarters. UBS also expects structural decline in the Bajaj Finance return on assets and margins, which can fall short of their long-term goals. Now, if we recall the Q3 performance, that was quite good. Bajaj Finance on all metrics, and several brokerages had also upgraded the counter after their results. So, this sell call by UBS is one caution in this positive wave. Yatin, what do you make of it? Because UBS also said that they believe that this market is very overly optimistic about the company's EPS estimates at this point of time.
I think, the kind of commentary we saw from Kotak Bank and Bajaj Finance in terms of the personal loan book and the overall demand scenario, that was encouraging. And, post the numbers, both Bajaj Finance and Kotak have been doing very well in terms of shareholder returns. UBS obviously has been cautious given the fact that the shares have run up quite a bit. But given the fact that now, people would prefer quality companies in the correction, probably a lot of domestic funds are also adding up their positions. So it would be, very much to be seen in the shorter term whether or not FIs really dump all of these shares. But as of now, it looks that the stock has reacted to the UBS report, which was on a downgrade side. But we haven't seen big downside in the shares of Bajaj Finance. In fact, technically, a lot of analysts that we speak to have been positive on the stock of Bajaj Finance, at least for the short to medium term.
Yes, that's right. One of the best performing stocks for this year at least. But with that, we have come to an end of this edition of Closing Bell. It's a wrap from Yatin and me, and thank you for watching.